You're overpaying on bills. Not maybe, you're 100% overpaying on bills. If you want to save hundreds of dollars by following a few steps, you're not going to want to miss this video. I just received this check for $190 and it took less than 5 minutes of work to claim it. What's going on YouTube? Welcome to Currency Counts, where I cover all things money. So are you ready to save some money? As I mentioned, you're 100% overpaying on your average monthly bills. In this video, I'm going to show you how you can save a lot of money by lowering your monthly bills and also receive easy checks like this. So we're going to start with the first bill you're going to save money on, TV internet. You probably subscribe to your TV internet at an introductory rate. Now, after that rate ends, you're back to paying full price. And you might not even have noticed it because you might be on auto draft where they just pull out the funds every month and you're not seeing what's actually being deducted. Or even if you make your payment online, you see the price change and say, you know what, it's just easier to make the payment than to call and cancel and look for new service. All you have to do if your introductory rate ends is call and ask them, do you have any promotions running at the moment? And this takes all but 5 minutes. I did this myself last week after my promo rate ended, and I went from $65 a month to $48 a month, $17 in savings. Doesn't sound like a lot, I know. All that effort to save $17 a month. So I calculate my savings in years, not months. So over a 12-month period, that's $204 in savings. And if your TV internet provider doesn't want to budge, doesn't want to put you on a new promo plan, Verizon has 5G home internet for $35, T-Mobile has it for $40, so you always have options. Or maybe you want to stay with your current carrier. You can always cancel and then subscribe as a new customer on their current promo plan. It's your money, you work for it, don't give it away. All right, so we're in saving $204 a year. Let's continue. Next is auto insurance. And the longer you've been with your current carrier, the more you're gonna save. Now, you wouldn't believe that to be true because most carriers have loyalty programs where they discount you for every 6 to 12 months you've been a customer. Not true. On paper, at face value, it looks like you're getting a discount, but loyalty programs are just a marketing tool to keep you from shopping around for a better rate because you believe you're getting the best discount available. But I dare you to go to your current insurer's website and fill out an online quote and compare that to what you're currently paying. Now, this is gonna only work if you've been a customer for more than 6 months, because at every renewal, every time that policy rolls over, the price is gonna go up. And that's just a fact across the board, no matter what insurance carrier you have. And it doesn't matter within that 6 months if you ever filed a claim or not. It's just gonna go up. Now, the cheapest auto insurance I found is Progressive. They didn't pay me to say that. As a matter of fact, their customer service is some of the worst customer service that I've dealt with. And this is just my opinion, but if you don't care about customer service or can sacrifice that and just want a cheap auto insurance policy, check out Progressive. So whether you go through Progressive or cancel and restart a new policy with your current provider, you're gonna save about $50 a month. And you don't need to wait for your current policy to end to do this. Even if you paid 6 months in advance, you can get the remaining balance sent back to you. Okay, so that's another savings of $50 a month, $600 a year. So let's move on to our next one, which is in the same theme of insurance, homeowners insurance. Now, I'll be very quick here because I know not everybody pays this, but it's the same concept as auto insurance. If you let your policy roll over year after year without shopping rates, you can let your rate balloon out of control. And this is what happened to me. I let it roll over year after year because it was bundled up into my mortgage, so I really wasn't keeping track of it. And after the 5th year of having this policy, I noticed my monthly mortgage went up, and it was this policy. It had gone from $1,100 for the 12-month policy to right under $2,000. Put a stop to it, shopped coverage, and I saved $1,200, $1,100 to $1,200 for that year. And I actually got sent a check from my insurance company for $1,200. But if I didn't make that call to shop rates, if I didn't make the call to my current insurance carrier to tell them, hey, my rate's been ballooning out of control, I shop rates, I found this right here, here's a quote, I wouldn't have received that check for $1,100, $1,200. Now every year like clockwork, I shop rates. This year I got sent back a check for, I believe it was $180, $190, keeping that rate in check, right? Not letting it get out of control. So we're not even gonna count that one in our savings because again, I know not everybody pays homeowners insurance, but if you do, make sure you keep your rate in check. The next one can save you hundreds of dollars a month, and there's 2 ways of doing this. And that's refinancing your car. So if you're a few years into your auto loan, you can save money on your car payment by wrapping the remaining balance into a new loan. And you can save a few $100s a month, $2,400 a year, just by doing this. So if you only have a year and a half left to paying off your vehicle, I wouldn't recommend refinancing. See your loan through, get rid of that payment entirely, and never finance again. Don't even get me started on how auto loans keep you broke. So let's say that's the case. You only have a year and a half left to paying off your car, or your current interest rate is better than the current refi rate. There's still a way for you to save money on your auto loan. Most lenders will allow you to defer a payment, meaning taking your next car payment and adding it to the end of the loan, essentially allowing you to skip a payment. Now, you will still owe that payment, but it's just going to be added to the end of the loan. Now, what does that mean? More money in your pocket up front. And with the average new car payment being $738 a month, that's a nice little band in your pocket. So let's say we went the refi route. We just added another $2,400 of savings for the year. The last one is as easy as firing your bank. So let me ask you, does your bank pay you $100 a month? I didn't think so. Bank hopping can earn you $1,200 a year. Let me show you how it works. There are a lot of banks out there that want your business and that want to pay you for your business, but you have to sign up through the proper channels. So if you go wherever, to your local credit union, you go online, most likely you're not going to receive an offer to receive money when you set up a new bank account. But when you sign up through an official link like mine, when you sign up for Chime, you can earn $100 by setting up direct deposit and following a few simple steps. So after you earned your $100 through Chime, you can sign up for another bank that's offering $100 to sign up. You just have to sign up through the right link. And if you need help finding other banks that offer $100 to sign up, I have a bunch of different links throughout my channel, or message me and I'll send you the links. The Chime link is going to be in this video description if you want to check it out for yourself. And just by signing up for a bank account every month, setting up direct deposit, getting your $100 is going to earn you $1,200 for the year. So you just racked up $1,200 a year. And this is not savings, this is actual cash going into your pocket. All right, so let's rack up our savings here in terms of a year. So we're up $204 a year on TV internet, $600 a year on our auto, $1,200 a year on the homeowners insurance, but we're not gonna count that one, and $2,400 a year for refinancing your car. And let's not forget $1,200 a year for bank hopping. So that's $4,400 a year in savings. $5,600 if we add the homeowners insurance. So $5,600 a year just by being on top of your bills. Now that $5,600 is worth a lot more than 56, because if you have to use credit cards or take out personal loans just to make ends meet, how much is that interest worth? How much is that interest costing you? On $5,600, it's at least $1,000. So you can snowball yourself right out of debt versus digging a hole for yourself using plastic. I hope this video was helpful. Thanks for watching. Until next time. Bonus, if you have a mortgage and you have your property taxes wrapped up into your mortgage, you're gonna wanna make sure that you contest your property taxes every single year. I did that this past year and I just received this check for $360 just by contesting and lowering my property taxes.